Good morning, guys. So what's happened with the risk calc is that we're seeing a slowing down on retail positions. So that's actually quite good, because what happened is that they added short every single day since the beginning of November. Every single day they added short on the indices. So what happened to the indices? We're getting to all-time high, and that explains why things are pumping, because the dumb money are really bearish, and that they were adding short. Now they're stopped. Well, they're slowing down. Okay, so that's an important detail. We're still very much risk on at the big picture, but they're slowing down on their bearish bets. They're getting blown up. Once we see a big mass exodus of them leaving the casino, then we'll be at the top of the indices, and then we can decline and we can get some nice opportunities again. But they can't be holding on to a bias. If they hold on to a bearish bias, we'll pump. Okay, technicals did quite well, so they can get reset. So they measured out of 100, so we're quite a bullish day, to be honest. Yesterday VIX got crushed, Yellen was on the wires, and we got the FOMC later. Okay, so just bear in mind that they're slowing down, which is a sigh of relief, because it's horrible for those guys, because they're undergoing huge losses and they're exiting with terrible losses. But it's good for us as traders, because we want to see some normality return back into the market. And these apes, unfortunately, they are skewing things, and they need to get blown up. And that's probably one of the reasons why price is pumping, is to get these guys out. Admittedly, no, the big fish have done incredibly well as well, punishing the dumb money. But we have got to get those guys out of the casino. And I just hope that they don't add short again. They might try and sell it again today, which is a possible thing. QDB scores, CJ, UJ, Swiss J at the top, and we got lots of Swiss strength down here. Wow, pound Swiss, dollar Swiss, euro Swiss, and the CAD Swiss. So they've gone really long the New Zealand dollar, and I just put something in Discord to say it was possibly a trap. If you look at a big time frame, yesterday, Monday, Tuesday looked a bit fake on some Kiwi pairs, so it looked like it was trying to. It made it look like the Kiwi was strong, and of course it was trending lower, but they pumped price Monday and Tuesday, and it looks like the herd have got involved and they're trying to buy it, when you can see it was clearly trending lower. And so it's a trap, basically. Let me go to the robot. Yeah, robot. So yes, we're having lots of chop, and today is a good test for the FOMC. What we've done is that we've widened our stop loss and TP. So we've got 50 pips TP, 50 pips stop loss. Now they shouldn't be 1R. We need to have more take profit than stop loss, but just for testing purposes, we're going to try and at least get to break even, right? And then that's just test the bubble logic. And we should at least be breaking even. Now yesterday it was pretty catastrophic, because the volatility took us out of our tight stops. We had 25 pip stop loss, 25 pip TP, but our stops were getting probed. So doubling the stop loss distance should be okay, but if not, then we can have a look at the code, and we can perhaps even look at technicals. When you think about the technicals, they're like the byproduct of sentiment and fundamentals. The sentiment can be open to interpretation, and sometimes the herd can get paid, where the technicals aren't really going to lie so much, and it states it is what it is. You know, if it's strong buy, strong sell, it is because of the technicals or alignment. With the sentiment, it can tell us sometimes the herd are allowed to get paid, and so therefore traps are formed. So we might want to go down the technical route. If so, we'll have to call the robot version 3.1 or something like that. But we'll just see how we go this week. But we doubled the TP and doubled the SL. It's worth noting that gold, it did make a buy on FXCM trading station. I'll show you that now. And also, we've got to say is that I've got a dark theme on the trading station. Hopefully you can see it okay. And this is the alert that we have. We can have push notifications and email notifications from this, so when we get the crossover, we're like notified of the crossover. So let me show you gold quickly before we talk about DAX. And it's just the obvious support which I talked about here. we've obviously got I think a fairly obvious support there, and they've sold it, so therefore you're looking for long. It's a technical reason to go long and a sentimental reason. However, it looks like we might be going slightly sideways, if not slightly long, so you've got to be a bit careful, but I mean technically it's an okay support there. Okay, and these boxes, obviously supplies and stuff from them going long, we created a big supply, and we did chop a lot on those arrows, so got to be a little bit careful with gold. Okay, but technically decent support there. Okay, let's talk about DAX, and hopefully you can see the screen okay. We'll see, this is them going less short, so it looks, well, from a layman's perspective, it looks like they're going long, but I think this is more likely less short, because they were obviously bearish this whole time, and then they're getting blown up and they're leaving the casino. Probably another pump today will probably really help get them out, to be honest, and then they'll just be in a panic, despair, like a depression, and then they'll have that, well, I'm never going to trade ever again, this is a stupid market, and then they'll just get out a huge loss. But inevitably they'll probably come back, because they're addicted, and it's like a casino. And unfortunately for the bears, they didn't even get paid hardly at all in this whole time, since November. They didn't get any respite whatsoever this whole time. So the fruit machine gobbled up all their money, and it looks like we might be starting to sort of peak out a little bit here, but this is them exiting the casino after running out of money. Okay, they put so much money in the fruit machine and they're not getting anything back, and they think, well, this is a waste of time, I'm out. And this is what we'll be seeing, I think. S&P, and wow, okay, so there's that Greystone doji. See, I don't know if you can see that candle there, it's got a big wick above and then reverse it. It did exactly the same yesterday around about this time. So it does this Gravestone doji, long wick above, then pump. So it's like, it looks like it's still wanting to get people out of the casino. So you've got to be really careful. Very much a buy at the big picture as well, and you've got to be careful with fighting those flows as well. See, we're trending higher. Clearly trending higher there. It does look a little bit toppy, but it will carry on pumping. If you think about it, if you come back, you probably hear and you're like, well, it looks a bit toppy. Of course, just have to look left, and it does it all the time. Oh, it looks a bit toppy. I think I should probably get out. Admittedly, if they had sold it there, they've done quite well, but really, it carried on higher and higher and higher and higher, and it really carried on higher. So you've got to be careful, okay? US 30, and yeah, so we're pumping still. So yeah, today's going to be really important for our risk calc, and yeah, I mean, yeah, you kind of don't really want to fight that, do you, really? And then DAX, and yeah, so they'd gone long, also I say less shorts, but whether or not we're going to see a continuation, it's the trouble. So just to recap, is that they had slowed down, but it was quite a small movement. You'd ideally want to see a larger movement. A big movement here on this sell will tell us that they're exiting en masse, and then we'll eventually be topping out, and then this can come back closer to zero. We shouldn't ever be this skewed, to be honest with you. So trade safely. Remember, we've got FOMC. We've got potentially hawkish Powell later, and it's going to be moving the dollar a lot, and also the bonds as well. So be careful, and I'll speak to you guys soon.